In this presentation, we're going to talk about what happens today. Today in every business is a new opportunity for the business owner to make sales, cover his expenses, and put money in his pocket. We'll be doing a basic break-even worksheet. Today we're going to talk about what total sales will be for your business for today, whatever today is on the calendar. So if you're viewing this video on a Tuesday in February, think about what the revenue projection would be. How much money? How many sales would you generate today, a Tuesday in the middle of February? If you're viewing this video on a Saturday in May or June, and you're operating a seasonal business that would be in the peak of its season on a Saturday in June, what do you project your sales to be today? Line number 1 is your total sales for today. So write what you think you can generate today on line number 1. Line number 2 is what your actual cost of sales were today. Cost of sales is the payment that you made to purchase the product that you sold today. So, if you paid $50 for the product and you sold it for $100, you would write $50 for every $100 you wrote in revenue. For a new business owner, research should inform you what your cost of goods sold should average for the type of business that you're trying to start. This information is usually available online through industry data or can be researched at the library with some of the databases available there. Once you've determined your cost of goods sold, we deduct that amount from total sales. That brings us to line number 3, which is gross profit. If you're running a service-related business where your major expense is labor, you can put that labor rate into your cost of goods sold, or you can just enter it in the section below for your total expenses. It is probably best for this exercise to at least figure what the cost of labor would be to provide the service. Gross profit is the total revenue minus the total cost of goods sold, which gives you the balance of gross profit. What is left in the gross profit is what you use to pay all of your bills and expenses and put money in your own pocket. That is very important in developing your plan, to know what the margin should be for the business that you're looking to start. For existing businesses, this is a good exercise on a regular basis to make sure that you are within the national range for cost of goods sold for your business. Line number 4 on your chart will be cost of operations. Cost of operations will be very close to consistent throughout the full calendar year. This is the only line that will stay consistent throughout the year. What goes into this particular line are operating costs such as rent, utility bills, telephone, internet access, insurance payments, garbage pickup, and maintenance on the facility. These are the expenses that you total for the month and then divide by the number of days in the month and enter into line number 4. These expenses are dependent upon the research that you do for your business plan. A consideration may be the size of the space that you may need. Obviously, the larger the facility needed, the higher the expense will be. Also, retail space will cost more than warehouse or office space, so consideration of your operating expenses is vital to the long-term success of the business. Line number 5 will correspond to some extent to line number 2. Line number 5 is the cost of staffing today. This is one of the only expenses the owner can control. If business is quiet in off-season, such as February or March, then cutbacks on labor staffing is vital to the cash flow of the business. If the business needs to add staff to maximize profits in season, then controlling the hours will help the business to maximize profit and put more money in the owner's pockets. If the owner will be working the business by himself or herself, then it is important for the owner to determine what they would pay someone else to work in the business if they were not doing it that day. Whatever that payment would be, that expense should be included in this line because the owner is deceiving themselves if they do not understand that there is a true cost to every hour that they spend in the business. If the owner would be paying a substitute $8 or $9 an hour for a full 8-hour day, then that payment is the true cost of staffing for that particular day, and that information goes on line number 5. Now you will add line number 4, cost of operations, and line number 5, cost of staffing. This gives you your true cost for today for operations, for all of your employees, and or yourself if you're including yourself in the daily projection. Next, we will deduct line number 6 from line number 3. Line number 3 is gross profit, the amount of money you had left after you paid the goods or cost of service that you sold today. Line number 6 is your cost of operations and your cost of staffing. Line number 7 is really the only line that matters, because line number 7 is what you should end up putting in your pocket from today. By putting it in your pocket, I mean that this is the net profit of today. If the business is seasonal, then the net profit might actually be a negative amount. In many businesses, this negative number can extend for days, weeks, or months. That negative money has to be covered either by the owner out of his own pocket or an outside source such as a partner or a bank loan, or from the net profits saved by the owner from the higher revenue amounts. This daily review should be done day by day, week by week, month by month. It is very important for the projections to show a net profit for the year. If not, then further analysis should be done to make a net profit or rethink the investment in the startup of this business. Remember, the only goal is for the owner to make at least twice as much income from owning and operating the business as he or she would make working in the business for someone else.